So, you're thinking about buying a yacht? Yes. I love that. Let's make it happen. A lot of people see a yacht and think, that's impossible, that's a dream for somebody else. But I'm here to tell you that it's not. The open water, the freedom, the incredible lifestyle that comes with owning a yacht. It's more attainable than you've been led to believe. It's about having the right strategy, the right plan, and the right information. And today, I'm going to give you all of it. We're going to break down every single way you can make this dream a reality. Forget the idea that you need to walk into a dealership with a briefcase full of cash. That's the movie version, not the real world for most people. The truth is, there are multiple paths to get you on the deck of your very own vessel. It's just like buying a house or a high-end car. There are sophisticated financial tools and strategies available that smart buyers use every single day. We're going to explore everything from paying in full to financing, leasing, and even installment plans. My goal here is simple: to arm you with knowledge. By the end of this video, you won't just be dreaming about a yacht. You'll have a concrete understanding of the steps you can take to actually acquire one. You'll know the pros and cons of each method and be able to identify which path is the perfect fit for your financial situation and your lifestyle goals. So, get ready to take notes, get inspired, and let's get ready. Set. Go. Alright, let's talk about the most straightforward method first: paying in full. This is the clean, simple, all-cash deal. You find the yacht you love, you agree on a price with the seller or the dealership, and you wire the money. Boom. Done. The yacht is 100% yours. There's no debt, no interest payments, no bank looking over your shoulder. You hold the title free and clear. This is the ultimate power move in any negotiation. When you walk in as a cash buyer, you have immense leverage. Sellers love cash deals because they're fast, they're clean, and there's no risk of financing falling through. You can often negotiate a significant discount off the list price simply because you're making it so easy for them. The biggest pro, obviously, is the immediate and complete ownership. That feeling is unbeatable. Every single part of that vessel belongs to you from day one. There are no monthly payments to worry about, which frees up your cash flow for other things like fuel, crew, maintenance, or your next big adventure. You also completely avoid paying any interest, which over the course of a multi-year loan can add up to a substantial amount of money. You're not just buying a yacht, you're making a clean investment without giving a cut to the bank. It simplifies your finances and gives you total autonomy over your asset. You can sell it, charter it, or modify it whenever you want without needing anyone else's permission. But let's be real, there are cons. The most obvious one is the massive upfront capital required. You're tying up a very significant amount of cash in a single, depreciating asset. That's money that could be invested elsewhere, in real estate, in the stock market, in your business, where it could be generating a return. Tying up millions of dollars in a boat might not be the most strategic financial move, even if you can afford it. It's a concept called opportunity cost. What else could that money be doing for you? It's a serious question you have to ask yourself. So, who is this for? This method is perfect for individuals or corporations with extremely high liquidity who prioritize debt-free ownership above all else. It's for the buyer who wants simplicity and maximum negotiating power, and who isn't concerned about the opportunity cost of that capital. If you want the cleanest transaction and the psychological freedom of knowing you owe nothing to anyone for your prized possession, then paying in full is your power play. It's the ultimate statement of financial freedom. But, for everyone else, let's look at some other powerful options. Now, let's dive into a method that offers a middle ground, the installment plan. This is often arranged directly with the yacht manufacturer or a large dealership, especially for new builds. Think of it like a layaway plan for the ultra-wealthy. Instead of paying the full price at once, you pay it in a series of scheduled installments over the construction period or a pre-agreed timeline. This isn't a loan, so you're typically not dealing with interest in the traditional sense, though the total price might be structured to account for the payment schedule. It's a way to spread out the financial impact without involving a third-party lender. The process usually starts with a significant down payment to kick off the construction or reserve the vessel. This might be anywhere from 10 to 30% of the total price. After that, you'll have milestone payments. For example, another payment is due when the hull is completed, another when the engines are installed, and another when the interior is finished. The final payment is then due upon completion and delivery of the yacht. This structure is fantastic because it aligns your payments with the actual progress of your asset being built. You're paying for tangible results every step of the way, which provides a great deal of security and transparency. The major advantage here is improved cash flow management compared to a full cash payment. You don't have to liquidate a massive amount of capital all at once. You can plan your finances around these scheduled, predictable payments. This allows you to keep the rest of your money working for you in other investments while your yacht is being built. It's a more disciplined and structured way to manage a large purchase. For buyers who have predictable income streams or upcoming liquidity events, this can be a perfect way to time their payments without financial strain. It makes the dream feel more manageable, breaking it down into achievable steps. However, you need to be cautious. These plans are contractual obligations. If you miss a payment, you could risk forfeiting your previous installments and losing the yacht altogether. The terms are often very strict. You also have less negotiating power than a cash buyer because the seller is taking on more risk and administrative work by managing the payment plan. And remember, this option is typically only available for new builds from major shipyards or dealerships. You're unlikely to find a private seller of a used yacht who is willing to offer you an installment plan. So, it's a great tool, but one that exists in a specific niche of the market. Okay, let's talk about the most common method for buying a yacht, just like it is for buying a house: getting a loan. This is yacht financing. Don't let anyone tell you that borrowing money for a luxury asset is a bad idea. The wealthiest people in the world use other people's money to acquire assets all the time. It's called leverage, and when used correctly, it's honestly one of the most powerful financial tools on the planet. Instead of tying up your own cash, you use the bank's money to buy the yacht, and you keep your capital free to invest and grow elsewhere. That's the big picture strategy. So how does it work? It's very similar to a mortgage. You'll work with a specialized marine lender. These aren't your typical corner banks. They are experts who understand the yachting market. You'll need a significant down payment, usually between 10 and 20% of the yacht's value. The lender will then finance the rest. Loan terms for yachts are often longer than car loans, typically ranging from 15 to 20 years. This long amortization period is what makes the monthly payments surprisingly manageable for an asset of this value. The yacht itself serves as the collateral for the loan, just like a house does for a mortgage. The pros are huge. First, accessibility. Financing opens the door to yacht ownership for a much broader range of successful people. You don't need to be a billionaire with 8 figures liquid in a checking account. It allows you to buy a better, bigger, or newer yacht than you could if you were limited to only the cash you have on hand. The second pro, as I mentioned, is financial strategy. By financing, you retain your liquidity. If a great business or real estate opportunity comes along, your cash is ready to deploy. You're not yacht poor. Your money is working for you in multiple places at once. Of course, there are things to watch out for. The biggest con is the cost of interest. Over a 20-year term, you will pay a significant amount of money to the bank on top of the yacht's price. You need to calculate the total cost of ownership, including interest, to see if it makes sense for you. You also have to go through a rigorous approval process. Lenders will scrutinize your income, assets, and credit history. They'll also require a marine survey to ensure the vessel is in good condition and worth the price. This adds time and complexity to the buying process, but if you're financially solid and want to make your money work smarter, not harder, financing is often the best move. Finally, let's talk about an option that's all about lifestyle and flexibility: leasing. A lot of people get leasing confused with financing, but they are fundamentally different. When you finance a yacht, you are buying it over time and building equity. When you lease a yacht, you are essentially entering into a long-term rental agreement. You're paying for the right to use the yacht for a set period, say 2 to 5 years, without the responsibilities and financial commitment of ownership. Think of it as the ultimate try before you buy, or for someone who simply wants the experience without the strings attached. Here's the breakdown. With a lease, your payments are calculated based on the yacht's depreciation over the lease term, plus interest and fees. You'll make a down payment, often called a capitalized cost reduction, followed by fixed monthly payments. Because you're only paying for the depreciation, not the full value of the yacht, those monthly payments are significantly lower than what a loan payment would be on the same vessel. At the end of the lease term, you typically have a few options. You can simply walk away. You can lease a brand new yacht, or sometimes you have the option to buy the yacht at its predetermined residual value. The biggest advantage of leasing is the lower barrier to entry and financial commitment. Lower down payments and lower monthly payments mean you can get access to an incredible yachting lifestyle for a fraction of the cost of buying. It's also a fantastic option for people who love having the latest and greatest. Just like with cars, you can get into a brand new, state-of-the-art yacht every few years without ever having to worry about the hassle of selling your old one. All the maintenance and management can often be rolled into the lease agreement, making it a truly turnkey, worry-free experience. The main downside is that you are not building any equity. You're making payments every month, but at the end of the term, you own nothing. It's purely an expense. For people who view assets as investments, this can be a hard pill to swallow. There are also often restrictions in the lease agreement, such as limits on the number of hours you can use the engines or where you can travel geographically. This option is perfect for corporations that want to entertain clients, individuals who want a fixed, predictable yachting budget without any surprises, or anyone who values flexibility and access over the pride and responsibility of ownership. It's about buying the lifestyle, not the asset. So there you have it, 4 distinct powerful strategies to get you on the water, from the absolute power of a full cash payment to the structured progress of an installment plan, the smart leverage of financing, and the ultimate flexibility of a lease. The world of yachting isn't a secret club with only one way in. It's a market with sophisticated options designed to fit different financial profiles and different life goals. The key is knowing what they are and having the confidence to pursue the one that's right for you. No matter your budget or preference, there's a yacht buying method for you. The dream of standing on your own deck, feeling the sun on your face and the sea breeze in the air, is not about having $1 billion. It's about having a plan. It's about understanding the game and choosing the right play. Whether you prioritize debt-free ownership, cash flow management, long-term equity, or short-term flexibility, you now have the blueprint. You're no longer just dreaming, you're planning. Now I want to hear from you. This is where the conversation really starts. Based on what we've covered today, which method resonates most with you? Are you the all-cash type, the strategic financier, or the flexible leaser? Which method would you choose? Let us know in the comments below. Let's talk about it. And if you got value from this, hit that subscribe button, because we're just getting started on turning your biggest goals into your reality. Ready, set, go.